And Chairman SBI Rajneesh Kumar says the bank's gross NPA level will remain under check in the fourth quarter despite changes to its restructuring framework. US President Donald Trump has followed through on his threat to impose trade restrictions against China. He announced a 25% tariff on Chinese imports worth at least $50 billion, and products range from aerospace and machinery to information and communication technology. Trump also plans new investment restrictions on Chinese companies. This is the first of many, Trump has warned, and Trump has also promised that while criticizing China for intellectual property theft worth hundreds of billions of dollars. Listen in.
With China, we're going to be doing a Section 301 trade action. It could be about $60 billion, but that's really just a fraction of what we're talking about.
In retaliation to President Trump's tariff, China has announced plans for reciprocal tariff of $3 billion worth of imports from the United States. Products range from steel to pork. Bloomberg Tom McKenzie reports.
Well, it seems like it's a shot across the bow from China rather than a punch to the gut, because $3 billion versus 50 or 60 billion that Trump is looking at is obviously a big difference between those two numbers. And they're looking at, what, 25% tariffs on steel and on pork, 25% on pork, I should say, 15% on steel, 15% on wine and fruit. So, yeah, it's a warning shot at this stage from China. Look, China said, and it's put out statements this morning, whether that's from the ambassador in the US or the Commerce Ministry more recently, saying that they're not afraid of a trade war and that they'll fight it to the end, essentially, is what the ambassador said. But also, clearly, China's policymakers and China's corporate leaders really do want to avoid a trade war. So I would say suggest that China is going to take a pretty measured, strategic approach in terms of its response, in terms of reciprocal measures to what's coming out of Washington. No, there are other measures, clearly, that they can take. They've got plenty of other firepower, whether that's taking overt measures, just putting stumbling blocks in place for US companies operating on the ground here in China, or making it more difficult to import, for example, US soybeans. Of course, China pulls in about a third of all the soybeans exported from the US, worth about $15 billion US, and they have plenty of other tools at their disposal. But for the moment, this is going to be probably a measured response from a Chinese government that wants to focus more domestically on some of the pressing issues here at home.
Tom McKenzie reporting from Beijing. Cornell University Professor of Trade Policy Ishwar Prasad, meanwhile, believes that these tariffs will lead to escalating tensions between the two countries. In a conversation with Bloomberg, he added that there were far better ways of tackling intellectual property theft than an all-out trade war.
Well, after a long period of saber rattling, finally the swords have been unsheathed. And it's clear that this is going to lead to escalating tensions between the two countries. But the Chinese side, for its part, has responded with some harsh rhetoric, but also the Chinese seem to be trying to play the sensible grown-ups in the room. They've threatened some degree of retaliation, but not a very broad-based retaliation as yet. I think they're waiting to see what actions precisely the Trump administration takes, because there is still a waiting period where the administration says it will get consultations with businesses going and also try to work through the WTO process. There are legitimate concerns that the U.S. administration has and that previous administrations have had as well. The fact that China does not have a sound intellectual property rights regime in place, that they do restrict market access to their markets, that is to imports from the U.S. They make it somewhat difficult for American firms to operate in the Chinese market. But there are ways to get around this that I think would be far better than a unilateral measure to strike at China using tariffs.
More voices. JP Morgan Jahangir Aziz warns that the total value of goods included under the US import tariff could be much larger than $50 billion. India's Sherpa at G20, Shaktikanta Das, is worried of the implication that this is going to have on the nascent recovery in global growth.
If you look at the actual USTR report, it says that it will announce 1,000-odd items on which the 25% ad valorem tariff will be imposed. We don't know what those 1,000-odd items are going to be. And if you add up all the 1,000-odd items and the value of that, it may be more than $50 billion. If the impact is only on $50 billion of Chinese exports, then I think the impact is going to be modest, about 0.1% of GDP or thereabouts on Chinese growth, and maybe a little bit more in terms of spillover into Korea, Taiwan, Singapore, and Vietnam.
This kind of trade war, if it ultimately breaks out, it is obviously a matter of concern for sustenance of the revival of global growth, which is now visible. There are certain trade issues emanating from the fact that U.S. has a huge trade deficit with China. I think one would expect both countries to sort of bilaterally discuss their mutual issues and sort it out. If it leads to a kind of unbridled, tariff measures, then obviously it's not good news for the world. Not good news for these individual countries also, because, somewhere their downstream industries will also face the heat.
Okay. Those are some voices on what the implications are. We'll also talk about it in greater detail with Andy Shea, independent economist, who will join us from Shanghai at about 1:30. This is the context of how the markets are operating in. Escalating trade tensions have taken a toll on global markets, and India has not been spared either. Nifty and Sensex have shed over 1%. The Sensex, as we speak, is down about 400 points. Neeraj is here to tell us what really is going on what looks like a pretty bad day across the world.
Yeah, pretty bad day across the world. Frankly, but Harsha, the fall has proven me wrong, because I thought the fall would be much steeper than this. We've corrected about 1% in the quarter, maybe also because we corrected quite a bit yesterday in trade. VIX, as usual, has gone up. So CBOE VIX yesterday too went up, by the way. And India VIX has moved up about 4% At the point of time, it was levels of 16.10, currently at about 15.84. So as I said, the Indian markets are probably taking this a lot better than what I would have thought earlier. But the culprits are the same. So you have
banks.
The banks and corporate-facing banks falling today. So Yes Bank, ICICI, Axis, etc., all of them have gone down, and commodity names have gone down today. So Tata Steel, and there are maybe individual moves here, but had it not been for this bid as well, Tata Steel, Vedanta, Hindalco, all of these would have come off in the session today. So no clear winners. Even defensives like ITC, which had started off reasonably okay, came off. So there are these set of winners. I mean, if you just pull up what the Nifty gainers are, there are individual stocks which are making a move here, 1% here, 0.5% there. But broadly, weakness, just that not as bad. But yeah, banks, yesterday, Harsha, banks had seen short positions without any knowledge of this happening. Yes, people knew that something like this could come about, but banks had anyways formed the short position. So there is a bit of profit that people are sitting on as well. We are very close to the expiry. Next week, Monday, Tuesday, Wednesday, it will be interesting to see if there is a bout of some bit of profit booking or short covering, profit booking led short covering that happens in banks or no, because people who were short in banks all this while as well would be making some serious amount of money before a really long weekend and the expiry. Maybe that could come about. Not in today's session, but something to watch out for next week.
Neeraj, thank you so much for that. Let's move on now. Defense maker Bharat Dynamics listed a 16% discount to its issue price, with the larger market selling off and subdued response to the IPO. This was on expected lines. Purva Chitnis caught up with the company's chairman, Uday Bhaskar, to understand the opportunities in the country's defense sector, especially in the context of the new draft defense policy. Listen.
The financials 11 to financials 13 to financials 17, from 1,100 crores to 4,860 crores is almost a close to 5-fold increase, and that's at a CAGR of around 30 is really, a wonderful growth for BDL. That shows our capability. We retained the same teams. We ensured that, same 3,000 people have done this whole job by not only redeploying themselves, reskilling themselves, multi-skilling them in act, and then also factoring our various the Indian private industry, which is coming up, also has been factored with outsourcing almost to the level of around 70%. So all these factors made this type of a growth and this type of capability demonstration from BDL. However, the international some forecasting is there from FNS, which is part of our DRHP, which also hints that the segment, the whole industry may grow at a level of around 4 to 5 CAGR. And I'm sure that whatever may be the demand that is going to be kept on BDL, we will definitely be able to cope up with that. That should be the way forward for BDL.
And also, if we talk about the new defense procurement policy, first of all, what do you have to say on that? And do you think because of which the PSUs would, like, the role of a PSU would go down maybe?
No, defense procurement procedures and manuals, they emphasize on indigenously designed and developed products is the top priority for services to acquire. Then second, it also emphasizes on at any cost it should be made in India. So in that sense, the opportunities are more and more galore coming up onto the Indian companies, like particularly BDL. And because we are the today's manufacturer missiles, and we have all the facilities associated with that, skill sets associated with that. Also, one more important thing is under this strategic private partnership, scheme, the missiles is not a segment in that, basically. So that speaks about the segment in which BDL is there. The private participation, we are already taking them on board. In fact, in most of our, missile manufacturing, they are already. My outsourcing level is to the level of around 70%, wherein big public sectors are all big private sectors, public sectors, all of them are on board in our supply chain. And we are working together for a defense need, all of us.
So just a final follow-up question to that. So you are currently the market leader of it. So what if the competition grows? How would you able to sustain your role as a market leader? And what is the kind of competition that you're looking at right now?
No, it is important for us to ensure that the services demand is fulfilled on time. And we are definitely geared up for that. You have seen our growth plan, growth capability, which we demonstrated to the country. And also, we have actually enhanced our whole capacity in terms of automation of the current plants and also bringing into more plants and with a good capex in all of them.
So there is a demand.
There is a demand, and the demand we are already gearing up. We took every step that is required to ensure that we travel towards this, fulfilling this demand in the country.
Okay, that's the management of Bharat Dynamics. Let's move on now and talk about Tata Steel. Bhushan Steel may be the first of the insolvent accounts to be resolved. The steelmakers' lenders have approved Tata Steel's resolution plan. Nikki Mirchandani is joining us with the details. But before I get to that, news just crossing across the terminal about how the Tata Steel's bid for Bhushan is supposed to be about $5.3 billion in all cash. The bid, of course, needs approval of both the company law court and the competition panel. This will, of course, help Tata double its capacity. To tell us more about that, Nikki is standing by. So explain to us, Nikki, how is this going to help?
If you sum it up in terms of the basics, $5.3 billion is what they have offered to pay in terms of cash. It has been identified as successful resolution applicant by a Bhushan Steel Committee of Creditors.
Okay, I'm afraid I'm going to interrupt you there, Nikki. We'll come back to you in just a moment. Just to give you context of what's going on, Tata Steel has gone ahead and offered about $5.3 billion to acquire to the lenders to acquire Bhushan Steel, which has been first off the block in the resolution process. This will, of course, Bhushan will accelerate significantly, and this will double Tata Steel's capacity. This bid is not a done deal as yet because there are a bunch of approvals that are required. First, from the company law court or the NCLT, and of course the competition panel will finally dot this deal. Nikki, over to you. You were talking about how this will help Tata Steel's facilities.
Sure. In terms of the consolidation that we could see geographically, the company is already present in East and has a capacity of 13 MT. And with the acquisition of 5.6 MTPA seen by Bhushan Steel, it will further go up to 18.6, which will be at par with JSW Steel. In terms of the product mix, it will increase its portfolio more towards flat products, which currently stands at 72%, and also will increase its share in automotive products, which is also a positive. In terms of valuation, well, we just have a new number coming in at 35,000 crore in terms of all cash deals, so we're yet to assess the impact of it on valuations.
Okay, let's move on now and talk about telecom. The telecom regulator has released the subscriber data for the month of January, and the winner once again is Reliance Jio, that too with a huge mark. The new entrant has in fact added double the number of subscribers as compared to all its rivals put together. Soumit is here with the fine print of those numbers. Soumit.
So Reliance Jio has added close to 83 lakh customers in the month of January as compared to 39 lakh customers added by Bharti Airtel, Idea Cellular and Vodafone India combined. Now this is according to the latest release by the TRAI. However, on a net basis, if you see, the telecom sector has lost close to 1.5 crore subscribers. This is because of the fall in multi-SIM users or SIM consolidation as we know it. So the SIM consolidation taking place because of the consolidation in the service provider space and because of the cheap bundle plans offered by the mobile service provider. For Reliance Jio, if it was its best performance in the last 11 months when it comes to subscriber additions. In fact, in the subscriber addition for Reliance Jio has been increasing pace. Now, in the last month, it added close to 80 lakh subscribers, and in the month of January, it added 83 lakh subscribers. Now, this could be because of lower tariffs and because of the Jio phone launched by the company. Among the smaller operators, if you see, other than BSL, none of the other operators were able to add any more customers. Reliance Communication, Tata Teleservices, Aircel, MTNL and Telenor lost close to around 2.8 crore subscribers in the month of January. And going forward, this pressure on customer addition and consolidation is expected to continue because the players who are at a verge of exiting the telecom industry currently hold around 15% of the total subscriber base. Lastly, in terms of market share, if you see, other than Reliance Jio, market share has increased the most, that is by around 90 basis points, while that of other players like Bharti Airtel, Idea Cellular and Vodafone India has increased in the range of 30 to 45 basis points in the month of January.
Soumya, thank you for that. That's telecom numbers for you. Let's talk about banking now. And here's an exclusive interview. Chairman of SBI, Rajneesh Kumar, the head of India's largest lender, admits that power sector remains under stress and 180 days may not be enough to resolve certain stressed accounts. However, he says that the bank slippage may be lower than what it was in the third quarter. Listen into that conversation.
There are assets in which there is a considerable interest from the potential bidders. And for example, in case of Bhushan Steel, where the State Bank of India is the lead bank, the recovery on the NPA value of the loan, I am not talking about the interest which is unapplied after the account became NPA, it is as high as 74%. So what I am finding that depending upon the prospect of the sector, quality of the physical assets which have been put by the outgoing promoters, the value differs, and the range is coming from 25% to almost 70%, 74, 75%, and Binani is of course an exception, but otherwise the range is from 25 to 75% in most of the cases. So on an average portfolio basis, in the NCLT 1 list particularly, the recoveries are going to be on an average in excess of 40%.
Okay, so actually, if I combine both list 1 and list 2 of these accounts, I believe your exposure would be northwards of 75,000 crores. Would you have the same optimism about the quantum of recovery that could come in, Mr. Kumar?
No, list 2, the recoveries may be a bit lower because list 1 had some very good assets, and the smaller size loans, they don't fetch as much value as a large scale plant. Even for example, steel is the example where the Bhushan Steel, for example, or there is a considerable interest as far as SR Steel goes, but same cannot be said for a Monnet Ispat or a Electro Steel. So the recovery in each case is very different because it all depends upon what is the size of the plant, what are the products they are making, and what are the prospects going forward. So there are so many factors that it is very, very difficult to establish any benchmark that this is our benchmark and a minimum recovery or a maximum recovery of this much we can expect. So there are like the variation is huge as far as the asset sale goes under the IBC process.
One more question that comes to mind now, Mr. Kumar, by virtue of how a lot of these decisions are being challenged, in the Binani case specifically, but I'm sure in a lot of others it will happen. I think sources have said that even when the Bhushan Power resolution does come out from the NCLT, either of the losing parties will not be hesitating to go up to the higher authorities, which probably gives the belief that this process will not get consummated in the next couple of months. In all probability, this is a long-drawn process which goes to the highest court, and it's at least 6 months out, if not more. Would you agree with that? And is that, in a manner of speaking, disappointing? Because when these cases first went, everybody was hoping that these will get finished by the desired timelines that we were all talking about. It seems that there will be a tangible delay to these timelines.
Right, that is a fact that some challenges have come up, and some of the bidders who did not succeed in the bid, so on one pretext or another, they have approached the NCLT. But judicial process has to be honored, and because it is a new law, new process, everything is getting tested, but this should not dishearten anyone. I would say that by and large, the process is going on well, and courts also have found that they have not at least avoided or halted the process, and committee of creditors, they have been allowed to at least proceed, and of course the final decision is always subject to what the NCLT judge or any other higher judicial authority feels. So even just for example, even in case of SR Steel, the process has not been halted, but the judgment is that till 4th April it will be subject to the decision of the NCLT on 4th April. So I think when this process got started, even at that time, as a lender or as a financial creditor, we had some inkling that it is not that once the committee of creditors and the resolution professional has worked out a resolution plan, and that would be final. In any case, it is a judicial process, and the NCLT judge or the right to appeal, all those rights remain intact. It is an evolving law. We have to give it a chance. Many of the issues around the process, about the law, they will get tested, but on the whole, I would say that the adoption of the court, I consider it to be one of the most significant reforms which this government has carried out.
Just wanted to understand what is happening in the power sector, and are the recent concerns which have emerged, are they only largely to do with RBI's new framework on stressed assets, or are there actual fresh concerns emerging with respect to power sector performance as well?
So there are no fresh issues, I would say. There was a stress as far as the power sector, independent power producers are concerned. And most of these projects, they have been put up after 2010. The assumptions at that time that the country is having shortage of power, and there will be a good demand for power, and there will be more PPAs coming in. So somehow, because of the weak financial position of the distribution companies, that has not materialized. So the key issue even today is a PPA which is remunerative to the power producers. That stress was very much there. What the RBI circular of 12th February does is, it sets a definite time frame in which the issues around any NPA, the circular is not specific to power sector, either a resolution plan has to be worked out within 6 months starting from 1st of March, or the case has to be referred to the NCLT. So power sector, the only issue is that within 6 months working out a resolution plan may be a bit challenging. And the other thing is that as a lender or as a largest lender to the IPP, my belief is that in 2 years' time, there is going to be a shortage of power, and in such circumstances the existing plants, subject to of course availability of fuel, they can fetch a better value. But if there are instructions or regulatory guidelines given by the Reserve Bank of India, so banks have to be ready to abide by that. We will work sincerely to resolve these assets within 6 months, because a lot of effort was already going in to resolve these assets. And if within 6 months these assets or the issues don't get resolved, then I think as per the regulatory guidelines, the only option would be the NCLT route.
At the end of the third quarter, I believe the soft guidance that you had given was that that was the last quarter of material slippages, the run rate of slippages and credit costs would drop in FY19, as things stand and as things are unraveling, do you think it's difficult to give that prognosis, or do you still stand by that belief for FY19?
So FY19, there is no change. I stand by what I said at the end of the earnings call in the third quarter. I had said at that time that I'm not assuring anything about fourth quarter, but for June 19, our gross fresh slippages will not exceed 2%, and our credit cost will also not exceed 2%. So I am sticking to that guidance despite all whatever has been happening. I have reviewed each and every stressed account in the books of the bank, and after that analysis I had made that statement, and I am still sticking to that statement.
If not a number that you can share, at least is it fair to assume that NPAs in Q4 will definitely be a lot more higher than what you had projected at the third quarter?
No, they will definitely be lower than the quarter 3 number.
They will be lower despite the 12th February circular.
Despite the 12th February circular, the gross, I am talking about the gross slippage. So gross slippage, the number which we declared in third quarter, our estimate as of now is that in fourth quarter we will not exceed that number.
All right, that's the Chairman of State Bank of India. Meanwhile, news flashing on your screen. The Delhi High Court has attached the Singh brothers disclose unencumbered assets except their bank accounts. This is significant. This is the update from the Fortis Daiichi case that's going on in Delhi. A few more headlines coming in. The Delhi High Court, as I said, has attached the Singh brothers disclosed assets except their bank accounts. Singh brothers have been seeking their stay on executing the Daiichi arbitration award. They're also seeking stay till the verdict of the Singapore court appeal. For more on this, I'm joined by Arpan Chaturvedi on the phone. And Arpan, what do you know?
That's right, Harsha. So just to give the background of this case, this particular arbitration award is being challenged at different forums. One, which is your Singapore Court of Appeals, and the Delhi High Court had already said that this is a valid award and this is the execution plea that is pending. So what Singh brothers are basically saying that they do not need to pay this amount until the appeal to this arbitral award is decided by the Singapore Court of Appeals, and they sort of stay on that. Daiichi's stand is that they have the right to now execute this award, and they say that the claim now is well above 3,800 crores. And basically, in the order, the Supreme Court, the High Court, what it has said, is that the assets be attached, the valuation has to be done for that. A chartered accountant will be appointed, and this valuation has to be done before the next date of hearing, which is 14th May, as per the orders of the Delhi High Court.
Arpan, thank you so much for joining us with those details. That's the latest on the Daiichi Fortis case. We'll get you more details as we get them. Let's slip into a short break. On the other side, we're going to be discussing the US-China trade war. Independent economist Andy Shea will join us from Shanghai on the other side.
कुछ इसी तरह बच्चों के साथ साथ बढ़ते हैं LIC के चिल्ड्रंस प्लान्स, जो दे आकर्षक भुगतान बच्चों की हर बढ़ती अवस्था में। बढ़ो 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 मेरे संग।
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार, just working on my expansion plan.
Funding का चक्कर.
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख. ला.
अरे.
This bridge gets you in touch with interested investors. Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल.
हाँ.
NSE Merge, साथ हमारा, सफलता आपकी. the SME growth platform from India's largest stock exchange.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Back on Power Lunch, this is Bloomberg Quint. I'm Harsha Subramaniam. The headlines at this hour. Donald Trump triggers a trade war between the US and China by imposing trade barriers on goods worth $50 billion. The Asian nation retaliates by hiking import duty on select US products. Markets take a cue from its global peers. Trade more than 1% lower. Nifty drops below 10,000 mark for the first time in 6 months. 5 states will elect their representatives to the Rajya Sabha today, giving the ruling BJP an opportunity to increase its tally in the upper house of parliament. This is really about what's going on in global trade. That's having its ripple effect are felt across financial markets across the world, and India has not been spared either. The Nifty and the Sensex are down over 1%. Yatin is here with a closer look of some of those stocks that have been taking it on the chin. Yatin.
Well, Harsha, we are below that 10,000 mark, and we have the Nifty, which is now at a 6-month low. Of course, this is on the back of fears of global trade war escalating, and on the back of those fears, we are looking at some selling pressure. In fact, if you look at the Nifty advance decline ratio, has been weakest, which is almost 8:42. So we have 8 stocks gaining for 42 declining. As far as key gainers are concerned, we have only Bharti Infratel, HCL Technologies, Z, all of these stocks trading high by 1 percentage points. But look at the metals and how they've cracked in trade. So we have the likes of Vedanta, Hindalco, Tata Steel. So be it ferrous or non-ferrous, everything is down over 3% in trade. In fact, as we speak, Vedanta, Hindalco down nearly 4%. Private bank also taking a beating. So we have the likes of Yes Bank, ICICI Bank, Axis Bank, all of them down anywhere between 2.5% to 3%. The sell-off is really secular. As far as mid-caps are concerned, watch out for Union Bank, Syndicate Bank, JSPL. All of these stocks are top losers in the F&O trade on heavy volume. So broadly, we have seen a good sell-off in the markets, and there is no respite despite the fact that we were trying to take support at the 200 moving average, and that has been taken off decisively in trade today.
Yatin, thank you so much for that. Let's talk about the trade war. Indian markets alone are not alone in the sell-off. Equities here are merely getting pulled into a larger rout in global markets, triggered by what President Trump has done with the trade war. President Trump has imposed 25% tariff on Chinese import worth at least $50 billion. China has responded with a reciprocal tariff of $3 billion worth of US imports. What are the implications of this? And is this a beginning of a global trade war? To discuss this and more, I'm joined by Andy Shea, independent economist from Shanghai. Andy, thank you so much for joining us today. What have you made of this situation? Would you call this as a trigger for a global trade war?
Well, I think it has the potential. I think this is nobody wants a trade war, but it could get into a vicious cycle. We're talking about $50 billion on the U.S. side and $3 billion on China's side. These are not big numbers in relation to global trade, but still, it's a signal. So I think that considering that the global financial markets are facing rising interest rate, high valuation, this kind of trade war potential it really raises a risk premium.
What have you made of Beijing's response to this, Andy? The rhetoric has been equally strong, although their action has been relatively muted. Do you think further action is likely, and do you think others are likely to respond too?
Well, I think that China obviously doesn't want to have a trade war. China is the largest export country in the world. It has no interest in promoting a trade war. But still, you need to do something to incentivize Trump not to pursue one either. Trump wants the trade deficit to go down. But the trade deficit it cannot go down today. It's going to be a long, prolonged process. So, given that Trump is impatient, he's angry. So, he could do something very damaging. So, what China is doing is to hurt him where he would feel the pain. This is in two ways. One is that the swing states that are critical to his re-election. Trump was elected by a margin of 80,000 votes in the Midwest states. So China is picking some products that are targeting at these states. So hopefully that he will feel the pain. The other is the stock market. Now, Trump and all his friends are kind of stock market people. If the stock market goes down, they feel the pain. So if you escalate rhetoric, the stock market will go down. So let's see how it works.
Okay, Andy. So what else are the economic costs that you think the United States will have to bear? Is it really shooting itself in the foot?
I think that the U.S. still, Trump doesn't have a strategy. What he wants trade deficit to go down. He wants the America to reindustrialize. But what is the strategy? What is the United States should look like in 10 years or in 20 years, and what is the policy should be today? He doesn't think that way. He's just angry. So I think that this is where the danger lies. What I see is that China is trying to incentivize Trump to negotiate. And China could compromise on a lot of things like technology transfer, further opening the domestic market, and so forth. China has been pursuing purchase of U.S. natural gas and oil. A lot of things could happen. So what we need is a process. So let's see if it works. Still, I do not believe that a real trade war will occur. There is a potential for that.
Okay, Andy, we were also talking at a time when global exports were looking slightly up. Forecast for global growth was getting better. Data from the United States, both on jobs and economic numbers, look better than earlier. Does this conflict run the risk of tripping that recovery process?
Yeah, I think that on the other hand, the U.S. economy is led by the financial markets. So that growth is really fragile. The financial markets are really bubbly. So a little bit of growth that doesn't really compensate for the cost. So the U.S. economy is still on fragile ground. So the U.S. could easily slide into recession if the stock market goes down by 50%, which you really get to the market to the historical average variation. So it doesn't take a lot for it to happen. So if there's a real trade war, the U.S. will go into recession. And I'm not sure Trump is really prepared for that.
Okay. I have one final question, Andy, and this is with respect to, you alluded to the market reaction today. The stated position of the Trump administration is to have a stronger dollar. How do you think currencies are going to react? And should the world brace itself for a stronger U.S. dollar against most major currencies?
No, the dollar is weak. The reason is because the Trump tax cut is increasing the U.S. government borrowing, almost double U.S. government borrowing. Last year, the net debt issuance was $500 billion. This year, it's going to be $1 trillion. And it's going to be like $1 trillion a year for as far as you can see. So the market will have trouble absorbing all that supply. So I don't think that the dollar is going to be strong. This factor is there regardless of what we're talking about, like the trade war or the U.S. raising interest rate. It's just that there's oversupply.
We'll leave it there, Andy Shea. Thank you so much for joining us with your perspective. That's a view from Andy Shea, an independent economist based out of Shanghai, on what this would mean for global markets. He doesn't expect this dollar to get stronger. In fact, he expects it to get weaker from these levels. Back home, politics. Rajya Sabha will get 60 new members today. Most of the candidates are expected to go through unopposed. Some seats may see a close fight. In states like Uttar Pradesh, where the Samajwadi Party and Mayawati's newfound bonhomie has thrown up an interesting situation. Kaushik Vaidya is here to tell us about all of this and why today's elections matter. Before we get to why it matters, Kaushik, talk us through some of the key contenders who are important today.
So let's start with the fact that in any government, in the last one where Prime Minister Manmohan Singh was a Rajya Sabha member, to this one where senior ministers like Finance Minister Arun Jaitley, Defence Minister Nirmala Sitharaman, the previous Defence Minister before he went back to Goa, Manohar Parrikar, Suresh Prabhu, are all Rajya Sabha members. So from time to time they need to get re-elected from particular states. The BJP began its government with the biggest majority in the Lok Sabha in 30 years, but at a distinct disadvantage in the Rajya Sabha. Why so? Because it had been ruling in only 5 or 6 states in the country at that point in 2014, and it's taken that state-by-state sweep that the party enjoyed over the last 4 years to turn the Rajya Sabha math incrementally, slowly at a time. Because remember, it happened in a 2-year rolling cycle.
Right.
That's allowed the BJP only last year to get to 58 at the largest party in the Rajya Sabha. That's how fragmented this house is. At 58 out of 245, and that's the largest party. The halfway mark with 233 voting members is about 117, 118. So even at the largest party point, it's still a distance away from anywhere close to a majority, so to speak, in the Rajya Sabha, something parties that have ruled at the center haven't enjoyed. We've had legislation stuck in the past before, like the land bill, which eventually via an ordinance and then removed, that the BJP has not been able to get passed. So incrementally, this is the last step before the last general election, the next general election, to get those Rajya Sabha numbers higher. Uttar Pradesh you spoke of. Karnataka is one where the Congress is ruling, and that's where one open seat is in contention, and there's one in Jharkhand. Elsewhere, you have a number of candidates like Arun Jaitley in Uttar Pradesh who will go through because those numbers are there to back them.
Okay. There's been some reports of cross-voting in one of those seats in Uttar Pradesh.
That's right. So there have been a few Hindi media reports who've spoken to a particular few MLAs that say that they will cross-vote. Now, that this is an open ballot system, and we'll know once these votes are tallied who's voted where. The numbers in that Uttar Pradesh one, Harsha, are very, very interesting. You have 8 candidates for the BJP that will go through. For the 9th candidate that the BJP is put up, it is short by about 7 votes. The SP-BSP combined, using the Samajwadi Party is what are called surplus votes, that gets them to about 2 short. So the Samajwadi-BSP Congress combination needs to find 2 votes between independents or elsewhere. The BJP needs to find 7 cross-voting votes. This will go down probably to the last MLA and who votes which way, which we'll know later this evening.
Outside of UP, anything else of significance?
A Karnataka seat where the JDS has put up a candidate to see whether it can get a few cross votes from the Congress to not get wiped out in that state. And there's one in Jharkhand where the BJP needs a particular set of votes to come in from smaller parties, or the Congress is trying to get votes from its old ally, the JMM. So there's a Congress-BJP JMM fight in Jharkhand, and there's a JDS Congress fight in Karnataka in addition to this UP seats. Those are the only 3 that are actually seeing a head-to-head battle where particular MLA votes count. Everybody else, those parties in those states that are ruling, have the votes to see their candidates through.
Okay. Kaushik Vaidya, many thanks indeed for joining us. That's the action in Rajya Sabha. The elections are going on. Parliament, of course, has been adjourned again due to a ruckus in Parliament. Let's move on now and talk about India's at the onset of a scorching summer, and it's heating up the country's electricity prices. Spot prices on the country's energy exchanges have shot up by anywhere around 50 to 58% from the same time last year. But even that may be not enough to improve the power generators' finances. Prashant Jain, joint MD and CEO of JSW Energy, says a shortage of coal has increased the procurement cost, and that is likely to offset rising power prices. In a conversation with us earlier today, Jain also said that the company is focusing on signing more power purchase agreements and improving the plant load factor.
Power prices have strengthened in the current financial year. If I give you contextually, last year average power prices in merchant market for the whole year was 2 rupees 69 paisa, and for the current year it is 3 rupees 20 paisa. And for the current month, it is ruling close to 4 rupees at this point of time. And primarily this is happening because of the two things. One is that there is no additional capacity which is coming up in the market. So rather, in the current financial year, there is a decline in the capacity in the thermal space. Second thing is the power demand is increasing quarter on quarter. Last year the power demand grew by 2.5%, and current year the growth is close to 6% for the entire year. The current quarter, for the January and February, the growth is in excess of 7.5 to 8%. And last quarter it was 6.6%. So it's continuously increasing. So two sides which are happening. One side demand is increasing, another side supply is contracting. On top of it, the third thing is the availability of coal. So coal production has not increased. Some dispatches have increased because of the some stock which was available with Coal India, but precisely the PLFs are not able to sustain what it should sustain to meet the demand. So that's why you are seeing little bit hardening of the spot prices.
But do you think this is a phenomenon that could last? Because, I mean, in a manner of speaking, Prashant, and please correct me if I'm wrong, in a manner of speaking, this would have been the longest up cycle, if I can call it that, in spot power prices that we've seen in a really long time. Because previously, I remember they used to be very, very erratic and would come off very, very quickly as well.
Yeah, because in last 4-5 years you have been seeing a lot of capacity which was getting added up, and whereas the demand was not growing. And it all started from 2008 when everybody wanted to set up the power capacity, and those capacities were coming up between 2012 to 2017. And now, as we know that there is already a overcapacity and no new capacity is coming up, whereas the demand has been continuously going up. Right now, if you see, there is a countrywide, the PLF, which had hit 56% for the thermal power sector. Now it is ruling at 61%. So continuously the demand is going up, and then so is the PLF, and no new capacity will be coming up. So because of which you will see the strengthening of the power prices in time to come. So we are in the same scenario where we were in 2004 to 2008.
Some reports also indicate that rising coal prices could be a big factor as well. International markets believe coal prices have risen. The Chinese demand for coal, alongside with limited coal output growth, would also be a factor out here. Would you agree with the same?
Not really, because in India the power prices are not determined based on the imported coal-based power. It is primarily based on the domestic coal. And if I give you the context, the NTPC weighted average power cost is 3 rupees 30 paisa, and most of the power, out of 220 gigawatt of thermal power, close to 190 is the coal-based. And out of that, only 20 gigawatt is the power which is based on the imported coal. Rest all power is based on the domestic coal. So it's all decided by the domestic coal, not by the imported coal.
Okay, so what would all of this mean for JSW? And we'll also talk about the power purchase agreements and the recent one that you signed as well. But I believe you sell about 30% of your total capacity in the merchant market. All of this should augur well for you, right?
Yeah, for the current year, yes. Now the prices are strengthening, because of which our PLFs will be rising. And for the current year, we had started our long-term portfolio for power was 64%, which we have now increased to 74%. So now, as we are speaking, our 26% is the power which is not tied up and which we are selling in the merchant market. And higher prices which helps us to run the plant full, but it doesn't give us a big impact on our bottom line also, because at this point of time the coal prices are also ruling high.
Okay, And would you want to shed some light on this PPA that you've signed? I believe it's in line with what you've been doing, because I think you just told me that 76% or 74% of the total capacity is now being tied up with.
Yeah, so we have signed this 200 megawatt PPA with Punjab, and before that we had signed 176 megawatt with Haryana. So now with this PPA, our entire hydro capacity is fully tied up. This is for 25 years CERC determined tariff, and our Rajasthan project is also 100% tied up. Now we have two imported coal-based power plant. One is in Karnataka, another is in Maharashtra. Now those plants part are tied up on a long term, and balance are based on the merchant tariff. Going forward, we are working with the domestic coal tie-up, and we have already secured necessary environmental approvals, and now going forward in the Shakti linkage scheme, we will be bidding for that, and then we would like to bid for the PPAs and then tie up that capacity also.
So what does all of this do, Prashant, to how Q4 shapes up and how arguably FY19 shapes up? Compared to what people were estimating, Q3 was a miss. Maybe compared to what you were wanting as well, Q3 would have been a miss. Will Q4 be slightly better than that? And what about FY19? Because everybody's talking about how, while merchant power rates may be volatile, coal prices are not looking like volatile and staying higher. There's a Mawari note that I'm reading which is talking about the trend of continuous increase in coal prices as well. What are your thoughts here?
So in JSW Energy, Q3, Q4 are seasonal quarter, because we have a mix of both the thermal as well as hydro capacity. Out of 4.6 gigawatt of our total capacity, 1.3 gigawatt is hydro, which we have the seasons of Q1 and Q2 are the entire, most of the 85% income come in that particular quarter. So that's why you cannot see on quarter basis profits in JSW Energy or the operating performance. On a year-on-year basis, what I can talk about is that going forward, next year the capacity utilization and PLFs will be better than the FY18. And we have undertaken a couple of things in the current financial year, which we will be reaping the fruits going forward. One is that we have increased our long-term PPA portfolio by close to 10% so that will give a clear visibility and then a stable cash flow in next financial year. Second thing we have undertaken, we repaid close to 2,500 crore of debt during the current financial year till December. And also we refinanced our entire debt, and our interest cost went down by close to 1.1%. So these two things will be giving us lower interest cost, and because of which our PBT will be positively impacted.
So you would, and EBITDA, the assumptions that people are baking in is that while your revenue growth numbers will look reasonably good in FY19 going into FY20 as well, EBITDA could remain stagnant. Is that a correct estimate, or would you beg to differ?
So EBITDA is a function of higher PLF. If we do higher PLF, then EBITDA will be positively impacted. And if our interest cost comes down, then our PBT will be impacted positively.
Okay. One last question. The electric vehicle foray, is this some time away, or could it happen sooner rather than later?
So our target is 3 to 4 years we will be launching the first vehicle, and at this point of time we are working on building the capabilities, and very soon we will be announcing something about the leadership team which will be appointed in EV vehicle space. And also we are working on the product strategy, for which you will be hearing very soon, in probably 6 to 9 months, some concrete plans will be announced.
Okay, that's management of JSW Energy. Out of time on the show. Thank you so much for joining us. Countdown is up next.
बढ़ते समय के साथ बढ़ती सुरक्षा का वादा। LIC की जीवन प्रगति पॉलिसी, जिसमें बीमा की अवधि में हर 5 वर्ष बाद अपने आप जोखिम सुरक्षा की राशि में बढ़ोतरी होती है। LIC की जीवन प्रगति पॉलिसी।
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution है. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
Arey, there's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. Arey bhai.